It's earning season, your favorite time of year.
I got a little drink.
Well, what are you sipping on today?
I have my wife got these. I don't know what they are. This cotton candy Alani.
Okay.
16 ounces, too much heat. 8 ounces,
just right.
Just so sweet.
Oh, look at you rhyming. Well, welcome back, everybody. As always, Mr. Matty A, my co-host, Ryan Breedwell.
Howdy, y'all.
Let me put my phone away so I can be present with all of you amazing people. If you are tuning in live today, say what up to us on the chat.
Howdy.
What are you watching? What are you paying attention to? What are you seeing out there? This is what we want to know. So we've got, earnings galore from the last week. I know you were fired up about all that was getting covered. We covered some that were released last week, big ones this week. I knew when I saw my phone. I saw you hit my line this morning.
I couldn't believe it. I woke up.
Some of my holdings were looking nice and juicy.
I was looking in I have like a heat box of the ones I'm looking at. I got my this, and I got Palantir in there, and I was like 27%. Oh,
I think at the last I looked, it was north of 30 for the day.
Yeah, I called you when it was up.
Yeah,
I
you
saw the
in the morning.
27, and I said, "Oh my god!"
Well, we're gonna unpack some earnings today. Some of the winners, some of the losers. We are gonna talk about S&P 500 all-time highs.
I love it.
If you are invested in stocks, you're loving life right now. If you're invested in real estate, not so much.
You could still be loving life.
Don't get me wrong. I'm loving life. I've got my projects are moving nicely right now. I'm about to I got some positive news on a tenant that I've been chasing for a year. Another one outside of TJ Maxx and Harbor Freight that I got preliminary approval, but it's not official until I get that writing from the real estate committee. So there's still deals happening right now. I got an LOI out on a medical office building that the sellers are carrying back paper on, and we're negotiating terms on that.
Sick.
And it was one of those things where, they wanted this particular price, and I said, all right, if you want that price, then I need you to work with me on these terms over here in order to make the cash flow. And if you want to hit your numbers, I can hit my numbers too. But here's how we do that. And so creative finance is still working and happening right now. I'm seeing and hearing more money start to come back into the space of commercial real estate, which I talked about last week a little bit. And last week, I think we went live before Kevin Warsh's speech on Wednesday, an actual rate decision. So we'll unpack and talk about that a little bit.
We did.
Mortgage updates on where rates are at on the 30-year and 10-year based on what transpired in that FOMC and whether or not now is even a good time to consider buying. We've got some good stuff. Updates on Bitcoin, MicroStrategy, Anthropic.
Stuff on Bitcoin.
Yep. And of course, oil prices. Did they go up? Did they go down? I think we all know where they landed. And I was right in line with your expectations.
Wow. Man, I can keep my job.
Yes, you can. So I love what you said to me. I was like, man, S&P 500 new all-time high today. And what'd you say?
I honestly forgot. I've blacked out. When I was looking at the stocks this morning, I was like, oh my gosh. I've been hitting up, hit me up with the boys from Louisiana. They said, we're going to hit, so I'm flying down there on Thursday.
Yeah, I wish I could join you guys.
Shout out Teddy, Paul, Andrew, all the boys. But they're like, we're going to hit 8,000 while you're down here? I said, I'll ride an alligator if we do.
If we do.
I'll ride an alligator.
So why don't we just dive right in on last week? We had FOMC, Kevin Warsh. What did you see and hear from his comments? Obviously, they held rates, which was right in line with where you were expecting. And what went down prior to that, there's kind of a big hot story on, I don't even know how to say his freaking name, Leopold Aschenbrenner.
Dude, he did well.
And we'll unpack what happened there because it kind of feels like a Wolf of Wall Street type of move where the big boys positioned accordingly, and damn, did they take a nice bite out of his fund and at a really juicy price.
Citadel did.
Citadel.
Those bastards.
So we'll talk about that because I don't know. I mean, I know these things happen, but this is the first I've seen.
Short selling is like the Wild West. It's not illegal.
Right.
You're allowed to say wrong things. I mean, you can get in some trouble, but I mean, you're allowed to say the wrong thing. I completely think that they said that the Fed was going to hike interest rates to cause uncertainty and fear in high beta names because AI names are going to be the most rate sensitive, and they liquidated him. I mean, that's what happened. That's straight up what happened. And a lot of the news around it's been negative. Dude was up hundreds and hundreds and hundreds of a percent, even at the liquidation price.
Don't give him all the juice just yet. We're going to get to it. And there's a mistake he made in there that I think is relative to anybody that's investing. So we'll talk about that.
Yeah,
he
sold. That's the biggest mistake.
He sold. Well, he had to for a particular reason.
Yeah.
So
into that.
Let's start on FOMC. Kevin Warsh. They held rates. We had 9 members of the Fed decide to hold. We had 3 dissent and say they want to hike. We've been seeing probabilities of hikes increase over the last few weeks. The last week was actually a really strong week of data overall for the economy.
It was extremely strong.
So based on what they saw with inflation, he even said overall, we've seen job growth hold strong. We've seen economic growth. We've seen company earnings be strong. A lot of the, I think, what was it, PMI or PPI?
I think it was PCE.
PCE, that's what it was.
PCE.
Came out. That was a beat in a positive way.
Yeah.
So all the data that came out from the Fed, and this was, some of it was post FOMC meeting, they were basically saying there's a lot of positive signs of where things are heading. Yeah. And still, our biggest concern is the Iran conflict and how that ties into energy. Energy is what's keeping inflation elevated. So what did you take away from his speech? What were you thinking when he got off the podium, and how did the market respond to what he said? Because he did hold true to his prior comments, which was, we're going to give less forward-looking guidance. We want the Fed and we want what the stock market and the economy is doing to be more data-driven, not the words that are coming out of my mouth. And he even said, we're going to go for that 2%, number and mandate for inflation, not a whisper more. So that, to me, was a hawkish comment of like, I still got tools in my tool belt, i.e. I'll hike rates if I have to get us towards that number. And positive news is all the stuff that would lead us to really feeling like we're going to have to do something in the near future, we're liking what we're seeing right now.
Yeah, I mean, that's really what I took away from it. He was essentially saying everything's working. We don't need to put in these guardrails and guide the market like we typically do. And I took the comments more dovish because he kept implying it's only been 8 weeks. It's only been 8 weeks. I've only been here for 8 weeks. So just calm down, let things roll as they will. And I think it goes back to his prior comments at his first meeting where he said it's going to take time, but we have tools to get inflation down over a long period of time, through the back end of the year. My original opinion for that was they're going to flood the market with cheap oil, because that's going to be the way that they're going to be most effective. And here we are at 75 and some change on oil prices. I think that's going to continue to trend down if the negotiations that have been announced succeed and push through as of on tomorrow, Wednesday.
Yeah, so let's take a look. I mean, oil is... We got
exactly what I said was going to happen.
You said it was going to be sub 76.
I didn't know how accurate that was going to be, but I thought it was going to be sub. Well, I hit you up yesterday. I said we're at 79 a barrel and we need negotiations. Well, here we are. We had no announcement yet for negotiations. So negotiations get announced. Now we're at 75 a barrel. If it goes through, we'll be back down around 67 is my anticipation.
Yeah. So what? We dropped
literally back to pre-conflict, whatever the fuck this is.
Yeah. What are we fucking calling this shit now?
Bombing the absolute hell out of Iran. We've literally, I think, used about 78% of our long-range missile. Well, are reported long raise. I'm pretty certain we have a
Yeah,
lot.
you know they're keeping a
course.
few in the bag
Of
that nobody
course.
else knows about in public. So oil comes down positive, and as a result of FOMC giving somewhat dovish comments,
I felt like they were really neutral, but I think that they leaned more dovish than they did hawkish, because I think the Fed would have said, we maintain the ability to tighten or loosen. But I think it's pretty obvious. I mean, the cost of money is too high because it has to be. So they have all this stuff going on at the Fed that everybody keeps, glossing over like it's not a big deal. They have a whole task force out right now that still hasn't given their report, that is trying to figure out, why do we look at inflation data the way we do? Is it actually applicable to today's market movements and such? No, it's not. So they're going to come back with a retooling on how the Fed should function to meet its mandates, and can still use those tools, but it's plain and obvious. Everybody knew, oh yeah, here comes rate cuts, here come rate hikes. Now it's been a little
people
less
front running the market like a motherfucker.
Yeah,
and it was
how is that a free and open and fair market? You have institutions that can trade at levels that
and they've already got way more access to data and information beyond that forward-looking advice, right? I mean, you got the dark pools, you got all kinds of shit that ultimately gives them alpha beyond what the average retail investor has. So, based on all of that transpiring, and rate hike probabilities have
off the table.
significantly.
I will fall on my sword and say, I've really, in hindsight, sounded like a jackass calling for rate. I was right, baby. I was wrong. But with that being said, you can't, don't shoot the messenger. But with that being said, as much as I'll fall on my sword there's no hike or cut really on the table until something massive or really earth-shattering happens on the 10-year. I mean, we're way too high on the 10-year. It's bouncing around. I mean, if you could invest in the 10-year, like as an index, it'd have been one of the best investments you could have made post-COVID. I mean, it's up from point 0.7,
lowest was 0.55.
Yeah,
all the way. I'm pulling it up right now.
I mean, absolutely.
So let me see here.
It's kind of nuts.
Come on.
So that the restraints and the constriction that goes when money supply is so tight, like it is right now. You can't get money for cheap. I can't get money for cheap. Institutions can't get money for cheap. We have PALs, pledged asset lines of credit, for non-qualified assets. What wealthy people will do with their stock options and stuff. You're paying fucking 7-8%.
Yeah.
I mean, the spread you have to cover, unless you're like 100% equity, it makes no sense to even take a pledged asset line of credit. Well, I mean, I say that there's situations where it does, but I'm just saying the rate environment that people are used to and functioning in and being profitable, and businesses being able to pass through some of that, it's all getting squeezed in the margins for the cost of capital. If that can come down even by 20%, I mean, we're going to see a tear in the real estate market and a huge tear in the stock market. People will start using capital to better themselves. They don't have that ability right now. That's why buy now, pay later is so popular.
At an all-time high.
Absolutely. I mean, look at Klarna, look at Affirm, look at all these buy now, pay laters, and they're not even, most of the loans they do are 0%. They don't even charge interest. They just want the transaction fee.
Mm-hmm.
So we have all these indications that cost of capital is too high. The real estate market is the most obvious one. It's completely, I would say, a seller's market right now, or leaning towards a seller's market right now. My neighbors listed their house, 1.1 taxable. They have it for 1.8. Yeah, I hope it sells. I'm like 1.4, 1.5 taxable. So that would be like my house's market value is 2.223. That's like, do you know what the mortgage is on that? $13K a month fully impounded. Yeah. I don't know who. So just like when I see the asset and what it would cost to get that asset, it doesn't align. You ask somebody, show me a house that you pay 15 grand a month on, they're going to show you a Miami mansion. They're not going to show you a 3,200 square foot house that has a zero lot line. I mean, it's just, to me, it's unattainable for most people.
It is. I mean, I wish I had some big fucking amazing long segment on real estate data and how sexy and exciting it is. But the national average 30-year fixed mortgage rate right now is 6.78%. I mean,
Double.
to your point, right? And I can get the 30-year treasury, but you can kind of reverse engineer from there. It's without people's wage growth keeping up with this.
And it is per data today.
It's damn near impossible for people to be able to afford home ownership right now, at least at the entry level, right? I mean, if you're wealthy and you're buying up, you're trading in your home or whatever it may be, you've got some equity buildup. So it makes sense for some people to be able to do that, depending on how much you're putting down. It's all a math equation. But at the end of the day, I mean, it's pretty fucking wild with how much, how much that is ultimately preventing people from even being able to explore what homeownership likes. So coming back over to the S&P 500, so you can pull this up on the screen, Tone. We hit a new all-time high today.
Right, yeah, way more. 136 on the S&P is a big 1,000.
Well, we hit an all-time high. Did we hit an all-time high yesterday too?
No, we were 20 points off.
Okay, 20 points off. So
Yeah.
we're right there. S&P 500 hits a new all-time high. Do you think this is a function mainly because of earnings? Do you think this is a function of earnings and what the Fed said? Do you think it's a combination of other things?
It's earnings and Iran. The Fed has no impact on the market right now. I mean, maybe saying, okay, now we're not going to have rates up or down really, but they really don't have an impact, which is why they have an impact. If people are getting used to them stepping away, that's their impact right now. No rate hikes, no rate cuts. So Fed's kind of pushed aside. What are the catalysts that people are looking at? Is AI actually working? Well, it looks like it is, especially when Palantir essentially is quoted on their earnings. We can simply do things that other people can't.
Oh, let me pull up my baby. Let me pull up my girl.
To me, it could be tomorrow if we get positive news as far as that negotiations are moving forward. We would probably break 8,000 more and hold it.
Tomorrow?
Oh, yeah.
You think we're going to break 8,000 tomorrow?
No. If we get.
Oh, okay.
If we get positive negotiation thing.
Yeah.
Scott Bessent has said that we probably are
going to have a deal
by tomorrow
with Iran.
That's what he said.
Okay. Yeah. How many fucking times have we been on this show?
Well,
we got a new deal.
I love the Babylon Bee today. Trump warns Iran. This is the fourth and last time before he destroys them. He's going to hold off on the. But it's it's what it feels like. It's like we're here, we're there, we're here, we're there. If we can get something to put that to rest, we'll see a huge run up in the market. I don't know if you could stop it getting to 85 by year end. If we get that.
Let's take a quick break and hear from today's show sponsor. What if luxury homeownership in Orange County was more attainable than you thought? At Skyline OC, Orange County's tallest residential tower, you can own a designer-finished residence with resort-style amenities, breathtaking panoramic views, and a lifestyle designed for how you live, work, and invest. Whether you're building wealth through real estate or searching for your next home, Skyline OC offers exceptional value in the heart of Orange County with condos from the 600s to $3 million. Visit SkylineOCResidences.com and discover why now is the perfect time to own at Skyline OC. That's juicy.
That's less than it's like 9%. I mean, it's not really that big.
Well, I mean,
deal.
These are some real. I mean, if we're here where we're at in the stock market at this stage of the conflict,
the best market in the last 3 years seasonally. The market's higher seasonally than at the exact same time in 2025 and the exact same time in 2024. So when people try to tell you or say, oh, the market's too volatile or oh, this is this or this is that, bullshit. It is absolutely not. And volatility is a sign that things are moving. What gets really scary is when you get like a 2019.
Yeah.
Where you don't really have a lot going on, but the market's up 30%.
Mm-hmm.
So this is all backed by legitimate earnings, legitimate company change, legitimate technology shift, legitimate legislative shift towards the Clarity Act with crypto. What is that going to do to the financial markets? This is all legitimate. I don't see a bubble anywhere. It would be pretty obvious if there was a bubble. The only bubble that sort of exists is with like MicroStrategy and Bitcoin. That's a no-go area for me.
Yeah, well,
We got Michael Saylor like finally saying, okay, yeah, I did say never sell Bitcoin, but I said that because I meant like Michael Saylor will never sell Bitcoin. MicroStrategy, of course, is going to sell Bitcoin.
Yeah.
We have to as a company. So it's all kind of unwinding. And I've said for years that Michael Saylor is a fraud. He was exposed in the early 2000s in the dot-com bust. He fully BK'd his company then. He's likely going to BK strategy again.
Well, I mean, let's take a look.
What are they down? 80% year to date?
There you go. So as this is August 3rd, this was posted by the Kobayashi letter. MicroStrategy announced that it sold another 1,638 Bitcoin at an average sale price of 63,957, raising. I love how they're raising money. Why are they raising money? Why are they selling?
Because they have a cap. They just did that Bitcoin income monthly strategy. Like they're trying to pull yield off of arbitrage on purchase price. Stupid.
Well, that's what I'm saying. That's why they're fucking selling. They're selling because they're not in a good position right now to produce the yield and keep the reserve that they need for all their investors.
No. And they're literally, I mean, they put out white papers like Bitcoin could go to 0 and we would still be able to pay the yield for 9 years. How? You have no Bitcoin to sell, dude. Again,
you've been saying this for a long time. I mean, you called it a long time ago saying, one, I didn't even know that Saylor had a previous multi-billion-dollar bankruptcy.
Hundreds of billions of dollars.
Oh shit! Well, I didn't.
Not like $3 billion.
Like that. Do that.
I don't know.
And get more money like he's done at this stage.
Dude, I don't know. I literally.
If he can do it, y'all, you guys need to believe in yourself like Michael Saylor believes.
He's not like a stupid guy.
Obviously.
So he knows how to talk smart, but there's just no action at the back end of it. There's like zero action. And you know who's having similar problems in their life? Michael Burry. He hasn't hit a freaking bag. I mean, I think he made some money. He made some call options on Microsoft this week.
You want to know what else he shorted?
I believe he shorted Palantir.
He shorted my girl.
Yeah.
He shorted my girl. Let's put her up real quick.
Margin called.
I don't know
how you
come
get
back over here.
27% position.
Look at that juicy daily green.
Now, but do you see that gap there?
Yes,
that's gonna fill.
Yeah. Well, so tell them what you.
There's a high amount of risk.
And what do we call that?
That gap
right there.
Oh shit. That move. There's a lot of. That just means that the stock price moved so much. There's a whole bunch of naked, like there's no purchases in between those values.
They just jump.
Yeah. So typically what'll happen is that'll gap down to the top of that lower candle, and that's kind of the support level. And then typically, it doesn't always happen. This isn't black and white. This is trading candles, you know. But look to the left, if we go a little bit further back on that left, see how that gap immediately filled?
Yeah.
And then so my anticipation, and it happened again every time there's a gap, it fills, it primarily fills. So we'll see. I'm not a day trader anymore. What do I know? I just managed a couple $100 million.
Okay, so you tell me, because tell everybody what you told me, because Palantir jumped. It was.
I forgot what I told you. What are you gonna have to? You have to steal my thunder.
You're dropping too many.
I had to go speak to.
You called me and said I would consider.
Oh, I can't. Well, yeah, we already own that though. Iron.
No, I know, but I'm just saying. You told me, hey, like Palantir.
Oh, I would. Yeah, I was like,
you like take a little profit off the top,
because guess what's gonna happen probably tomorrow?
Is gonna fill that gap.
I bet you there's gonna be some profit taken up.
So, because this is something that I think. I'm just curious because I believe in taking profits along the way. I think it's really important and I like diversifying. I'm just curious on when you see your portfolio expand in a nice, juicy, healthy way, but also, hey, let me be smart about taking some profits. Like, how do you look at, or how do you suggest clients look at their portfolio? Obviously, you manage a significant, amount of money. You manage my portfolio. You manage a lot of people's portfolio. How and when do you look at taking profits, and how do you look at where you put those profits?
It's hard because the face of it is are we in a non-qualified or a qualified account, right? If I'm in an IRA or a Roth, whatever, I mean, can trade with unlimited deferral on the gains, right? Because those are income tax based. If I'm in a non-qualified account, it really depends. I have clients that they tell me they don't want to have a ton of capital gains realized, so I have to manage. We buy the same stuff and manage it in a different way. It's really, for most clients, myself, yourself, most of the people that are my clients listening to this, I don't worry about taxes.
Mhm.
Taxes are just a price to pay because we made money. They're an indication we're making money. So we're typically going to say, okay, hey, we had a 4% position here. We ran up a ton. We're at a 6 or 7% concentration. We don't want that much exposure in this name. We're going to shave that off and say, okay, we have SpaceX, we have this name. They're down and we're accumulating, and we have a lower 0.5% or 1% position or concentration to that. Probably going to put some money over there. That's typically what we do. But it's not a cookie cutter answer. It depended on the client. I have clients where I have a cap gains limit per year where I can be at. So I have to go check, am I near that cap gains limit? I have 6 or 7 more months. Is there going to be a capital event that I need to react to? So it just depends. Most of the time, though, I would say 90% of the time, we're just putting the trade in.
Okay.
We don't worry about taxes. Ed Slott, very, very famous national CPA, travels with financial advisors, very big on avoiding taxes. His number one rule of tax planning is pay some damn taxes. It costs too much money to avoid taxes. You have to pay people to get the information. You have to set up very complicated trust, Delaware statutory trust, deferred sales trust. Then you're locking the asset up. Just pay the taxes. You work so hard to avoid tax, just pay it. It's cost basis. Spend 18 months making the taxes back and just stop bitching about it. It's really not that big of a deal. But people make it a big deal. And that, to me, low net worth mentality. High net worth individuals do not care about taxes typically on their investment accounts. If they understand if we ran up 27%, they'd rather make the earnings on 27% than hold and be down 16% and then liquidate.
Yeah.
So that's what I normally see. So most people are not excited to see the tax bill. I was just talking to one of my clients, Mike. He might be listening live right now out in Texas.
What up, Mike?
And he was like, yeah, I saw you literally bought something in March, and we have like $100,000 in capital gains from a sale in June. I'm like, well, yeah. He's like, and we've already made all the tax money back. He's like, yeah, I had to pay taxes on it, but I'm looking at the account. My CPA already said we made all the taxes back. So just it's you don't need to worry about taxes typically on the investing and stuff like that. You just worry about, what am I investing in? What's it going to look like in the long term? There is some tax loss harvesting and stuff. We have a contract with 55IP at one, which is who does all the tax loss harvesting for Wall Street firms. They do our tax loss harvesting for us. And
all right, so
that's really all we look for.
On that note, real quick, because obviously there's, a lot of people do worry about taxes. I get it.
Real estate's for taxes.
To your point, right?
Yeah.
Real estate, that's where having some symbiotic relationship with your stock portfolio, your life insurance, your business, and real estate. There's so many different ways that you can, without getting too crazy on the trusts and all the right? Like,
you have to be a real estate investor per IRS definition.
Right.
I've had that. Do you know how many times I have that conversation with people? They're W-2'd and they have
750 hours.
And they like, oh yeah, I'm going to depreciate. I'm like, no, you're not. You cannot depreciate. Why? You're not a full-time real estate investor. You don't get that benefit. You can write off like repairs, but you ain't dividing by 27 and saying send it to Evan. You ain't doing that. 27 and a half, excuse me.
Yeah.
You can't do that. You just can't do that. And I literally had a lady who I met this year. She just dropped like $600K on real estate because her friend told her that she could do it. And she just found out from me, oh yeah, no, she went and talked to her tax person after. Yeah, no, you can't do that.
That's why you don't fucking take advice from your friends unless they are the expert in whatever it is that they're talking about.
Exactly.
But I mean, that's why I love cost segregation studies. There's a time. Here's the thing. All of the Delaware statutory trust, all of the things that we're talking about, cost seg,
They work.
They all work, but there's a time and a place for them.
And there's a situation.
And most people don't qualify when they do it to do what they're doing. I think the one thing that I see, and I'll raise my hand, right? I've done, back in the day, I was setting up entities and layering and all this structuring shit. And it was way before I ever had any business doing it or actually needed it. I see so many people talking about the cool, sexy shit on Instagram and TikTok and all this cool fucking, hoopla about how you can do all these things. And it does not apply to 98.5% of people that are watching the video. So just be careful. That's all I'm saying is just be careful, be smart. Everybody's situation is different, like you said.
Yeah, but
right?
Most people, if your net worth is under 25 million, I'm sorry to tell you, you're going to be doing the same thing as somebody with a $500,000 net worth.
Yeah.
There's nothing spectacular about a $20 million net worth besides that it's $20 million. You have to have a certain level where it's like, okay, now I can, you know what? Death taxes, I have to really cover my estate. Now I'm going to lose all this money when it goes to my kid. Now I do need to do this because I can actually earn so much in interest off this asset by locking it up because I know I want it to go to my kids or I want it to go to a charity or what have you, another trust. Now it makes sense. And by the way, if you do this type of stuff, I mean, DSTs have to be set up well in advance of you doing the transaction. Most of the time, by the time people find out about DST, they're like, oh yeah, the transaction's done. I'm like, okay, what are we talking for then? You can't even do it. The DST has to be established, notarized, attorney has to be all done before the sale of the asset. And again, talk to your legal team.
Yeah, I mean, there's other vehicles out there that you can do it after your sale. But again, those are specialty type of situations.
They're niche.
Very niche.
And they're also specialized products designed because most people don't know to go before.
Exactly. That's exactly why they're
And
there.
what are they going to do? Yeah. What are they going to add extra to? Oh, you messed up. Just pay us a little bit of
fee up.
Yeah.
Yep. Okay, so let's because I did sell some of my Palantir stock today.
I told you to.
I know. That's why I did it. See, here's the thing. I'm a good investor because I know where I execute in my wheelhouse, and I have people that are way smarter than me tell me what to do in the areas that I don't know what I'm talking about.
I talked to the chamber up here in Roseville, and like on my way out back to my car, I'm like, sell it.
Yeah. So I
was playing phone tag with you all day.
Yeah. So I got on. I sold some of my Palantir. Obviously, there was a juicy return today, and I IPO'd with Palantir. I got in on their pre-IPO in a little private equity fund, and I think we sold some a while back in 2021.
Yeah, I liquidated a good chunk of it. You know.
You motherfucker.
But hey, I don't bat 1,000.
Hey, but
we're at Hall of Fame numbers, but we're not at 1,000.
But we also made it back on other things.
Yeah.
So again, it's all,
I know the thing that I would say is good thing we held half, and then the other stuff, we've bought names that, like you said,
have all run up.
Hundreds of %.
Yeah. So I said, well, all right, well, if I sell it, what should I buy? And so 2 names came up. And again, not financial advice. I'm just figured I'm going to be transparent and share what I'm going to do with some of it. So there were 2 names that you said you like that I should look at. So I'm going to split some of that and I'm going to go, what do you think? Should I go half and half into both?
Or was it Iron and
SpaceX?
Yeah, I mean, I would probably go a little heavier into SpaceX.
Okay, so let's talk about Iron real quick.
Mm-hmm.
I was like, what the fuck is Iron? I don't know what this is, and why do you like it?
Cloud AI data servicer with like crypto touches. They're kind of all over the place in a good way. $17 billion market cap. They just purchased another AI cloud servicing company. I can't remember the name of them. They start with an M.
Let me see if I can find it.
They're the real deal. I mean, Snowflake was they kind of remind me of Snowflake early on. But I really like Iron. Their earnings and their EPS numbers and their financials look really good.
So we're going to look at throwing a little bit into Iron and then SpaceX.
Yeah.
So we've been talking about this one. There we go. Come on, girl.
I got in with some of my clients. We're in that gap area. So I'm pretty confident it's going to fill. Oh, hello. I'm pretty confident it's going to fill, but we're down about 16% from our entry point, but I'm not a short-term
I mean,
investor,
look at this chart, dude.
I know.
Like, if you bought the pre-IP or the post IPO hype, I mean,
if you keep
my
going,
Lord.
Yeah, go down right a little bit up further and keep going right there. That little gap right there, that's where we entered.
Okay.
Yeah, so see how it's chunking up today. It's down a little bit after hours, but I think it's going to quickly get back to that. Just because of the company metrics and the earnings. This is our first earnings report that's been public. All the metrics, all the oscillators, all the indicators label it as it's probably a very good time to purchase it. So I would say, and I think on the IRN, it's like a neutral buy is probably what it says. Those are good purchases for long-term investors that are looking for high beta, looking for high returns. I think SpaceX is probably going to be very highly talked about in the next 5 years of how much it ran up, kind of like Nvidia did or Apple did or Google has. I think we're going to see some stock movement just like that.
Well, I mean,
not a guarantee, but
all I know is I'm a long-term holder, and my bet is that where I'm going to get it today is going to be a whole lot cheaper than where it's at in 10 years.
Yeah.
I saw, and let me pull up Meet Kevin, his expectations and where I think he made a price target.
The hard thing about the price charting on SpaceX, especially when it's so young, is it's going to have to split a bunch of times, 2 or 3 times. And so that's going to be hard to chart out. But that also is something that's going to be cool. You have 1,000 shares today and you might have 10,000 in 10 years. And then just holding that and letting it just keep splitting, and maybe one day they pay a dividend like Nvidia does, like a small one. I think I'm very, very bullish on the prospect of that. They just announced a deal with Nvidia today to do satellite data centers.
Yeah. So
how sick is that? So that's when companies are talking about quantifiable solutions to today's issues, but using tomorrow's technology. That's very interesting to me as a long-term investment. How can I get a piece of that? How can I see, Anduril? How can I get forward-thinking companies that are meeting today's problems with tomorrow's solutions? We have a huge, with the Iran conflict, we have a huge issue on cost and production for these long-range ballistic missiles. Anduril has a really good ballistic missile package, and they're very cheap. You can buy about 1,700 of those missiles for about 1 Tomahawk. So, and produce them daily. They're not hard to produce. So that type of stuff gets me excited because that is like the horse and the buggy to the combustion engine, and the landline to the cell phone, and texting, facts from texting, the internet, things that are going to really move the ball forward for the space that these companies are in. I think Palmer Luckey is somebody that should be really highly looked after, and I think he's a good CEO. I think that we have a huge upside to SpaceX, given their breadth of what they can do. I mean,
dude, look at Palmer Luckey.
I know, dude. He's
like this dude.
Does everybody know this is the guy that invented Oculus?
Yeah.
This is the guy that invented the Oculus.
I don't think a lot of people.
No, that's what he made. I think he made like $300 million or something from it. I can't remember exactly.
Did I tell you that I was in between deals on one of my projects, and I had an opportunity to do the pre-IPO in Anduril?
I thought you did do it.
I didn't do it.
I thought you got like a $40 price.
That's what I was getting it offered at.
Oh,
And
fuck, man. I thought you did that.
No, I didn't get in on it.
All right. Well, that's just, there you go.
Yeah,
that's what you get.
That's one of my.
I think they're at like 130, 140 fair private valuation right now.
Yeah.
That's going to be nuts when it goes public. So those are the companies, when you hear that, like, what's the next thing? Okay. Autonomous driving, autonomous flight, supersonic flight,
Robotics.
Yeah, those are the things that are going to be, as crazy as they sound today, those are going to be household investment categories. I'm telling you, in the next 5 years, I bet you we're going to have a house that was fully built by autonomous robots. Like not one human stepped foot and built anything there. Maybe managed it, but I'm talking robots building a house.
I want to say it's already out there.
It is. There's a company that already does it. It's just not.
I'm trying to think who that was.
We just talked about them 2 weeks ago.
Yeah. But to your point, I think, have I told you about my buddy Chris Lockhead?
Yeah.
He wrote you and him would fucking love each other.
We've talked to each other one time.
Okay. Yeah. You guys are like, he's the old you, like brilliant.
Or I'm the young him.
There you go.
There we go.
But you guys love all the same kind of shit, and I'll just leave it at that. He
making people money and the world a better place.
There you go. He put this on. I just thought this was funny today when you said that. It's like solving problems for the future, right? He's like, look, is SpaceX going to be worth more or less in 10 years? When you look at Amazon, he's like, the donkeys in Wall Street are going to be arguing about the numbers, but he's talking about, if you invested $1,000 in Amazon's IPO in 1997 and held it until today, that return
300 or 400%.
Yeah, I mean, you would be
I think actually
370,000.
Yes,
yeah. So you got $1,000 turns into 3.7 million. And I'm not saying that this is going to happen on SpaceX, right? Times are a little bit different, and
I have an account here with a cost basis of 6,600 that's worth 1.8 million.
See,
Apple. 10 cents a share.
That's amazing.
They weren't purchased at that just because the split.
Obviously there's more optics and eyes on what's going on with SpaceX and way more hype. So I don't think you're going to see that. But you don't know.
I would argue probably will.
You don't know. So that's what I'm saying. Like, you just don't know. Having exposure to some of these companies that are changing the world, as long as you don't need that money to live on it, like, these are some good bets to bet on for the future.
Yeah, and the thing that really hurts me, what I was doing today at the chamber, we're the referral advisory group for that, but they had somebody that wanted to take our position, so we have to do a debate.
Oh, and I would not want to be debating you on your topic.
It lasted 10 minutes, and the other advisor that was supposed to debate me bowed out.
I was gonna say,
did he? He literally quit on the spot. It was Edward Jones. So Primerica and Edward Jones. When you're at places like that, if you're at Eddie, if you're at Northwestern Mutual, Mass, any of these big box, they aren't going to do that. In fact, they're going to do the exact opposite. They're going to buy you some dog mutual fund, some pre-built cookie cutter portfolio with zero thought behind it. All they want to do is bill your account. I bill your account too, just to be forward. But we are looking and researching and trying to find these names. And what kills me is that the last account I looked at, 2.25% at Northwestern Mutual, $5.6 million. What? Do you know how that is triple my advisory fee a year?
Jeez.
That's a lot. I'd already be making over 20 grand on that account. They're paying 70 grand a year in advisory fees plus commissions.
Oof.
And what are they in? Hold on, Matt. Here you go. A-share mutual funds. They're in the absolute.
So they're getting zero alpha.
And you go look what they're in. Growth Fund of America, Technology Fund, Fidelity S&P 500. Absolutely zero thought behind it, and paying like hedge fund research costs. And that is what kills me when I see investor stuff. I literally can show somebody.
Do you think those big box brands days are limited with the amount of transparency
100%.
and
UBS,
technology?
so first of all, UBS, one of the biggest. They're right across the street from me in Douglas. Shout out UBS. I love taking accounts from you. They are one of the highest fee broker dealers in the nation, right behind Ameriprise. And what they do is they have really good research. They have big worldwide offices. They have the pedigree behind them.
Mm-hmm.
And then they completely set up everybody in the exact same portfolio. And so everybody has the exact same experience. So when they make one bad call, it is like fire sale because everybody's hurting. So now what are they seeing in their models? What did they just announce? They used to give their broker head counts and they're down, down, down. What are all the brokers doing? Quitting. They're like, we're not going to be affiliated with companies that tell us what we have to do for our clients, and we can do other stuff for our clients and not have to listen to you.
Mm-hmm.
So UBS essentially just announced they're going to start cannibalizing their own model. We're stopping to announce our broker headcount. It's going to go down pretty much every year because they're going to switch their brokers to IAs, an investment advisor, what I am, because they need a fiduciary capacity. People know that they need to have their advisor work for them, not for a company that represents them, that tells them what to do, and then jams you size 6 into a size 9 shoe, which is typical. They need advisors now that work for their clients because that is the standard now moving forward. People know about, 10 years ago, nobody lost business over fees. Nobody lost business over performance. They pretty much lost business because they didn't talk to their clients. Clients have been educated and hyper educated with the advent of COVID on what they want, what they expect, and they want it quick, fast, and cheap. So we're able to do that because I structured the firm that way early on.
Mm-hmm.
That's always been my dig. Now, those companies, they're
All the time?
Oh yeah. I mean, what was I looking at numbers? We're 72, 73% of the new money that comes in at my company, my firm, a little over $1 billion a year from other firms. We're not even paying the customer cost of acquisition. They're just figuring out that what they have is shit. Because we tell them, this is what it should look like. And we'll have it verified by a third person that this is what it should look like. And you don't have that. The other one today, that account with that lady, the fucking advisor had like 6 disclosures. And like the most recent one was from literally taking stolen property.
Can you, I don't know if you can share this. Can you share that website that people can look?
Yeah, you go to www.
Before you share it real quick, this is like your favorite fucking website, by the way.
Yeah, we can.
Anytime he hears who somebody's advisor is, and if you haven't picked up that Ryan is fucking competitive and he doesn't like people being taken advantage of in his industry, that was one of the reasons why you and I vibed, was because there's a lot of bad apples in any industry. But we really don't fucking like when there's people that are taking advantage of other people, especially when it comes to people's money, investments, and they're still winning and nobody doesn't know about it. They do some gymnastics of finding a way to fucking put a facade on and cover up their brand. And so some of the people that have, I've either referred to him and he knows who their advisors are, or even my previous, person, we look up on this website. There's a website that you can go to that you can look up your financial advisor and you can see if they have any disclosures on them, meaning they've got either slaps on the wrist or
can we do mine live?
Let's fucking do it.
Look, go to mine. Be easy.
All right. So tell me.
Advisorinfo, one word, .sec.gov. Oh, come on. Just type in IAPD on just IAPD.
IAPD.
There you go. Click the investment advisor. Nope. That one right there. Yeah. Investment advisor, public disclosure. There we go. Hit I understand. We're not scamming.
Okay.
Type in Ryan Breedwell. Click that bad boy. Right there.
Ryan Allen.
So, okay, let's look at these two right here. Whoever Ryan Breedwell is, might have a See how there's just an IA next to my name? See this little bubble?
Yeah.
That means I'm a fiduciary. See this person to the right? How they have an IA and a B? That fucking person works for FBL Wealth Management. Works for them, meaning he is not a fiduciary. Now click on the more details. Scroll down. Notice how my firm is my office address. Do you see that in the right corner? Foundations Investment, 3300 Douglas Boulevard. That is my office address. I own the place. Keep scrolling down. Keep going. Current registrations. Click Foundations Investment Advisors. Click Part 2 brochures. Holy hell in a handbasket. This is everything about me, and I just filed this on July 30th, like literally 5 days ago. Go down. It'll have all of our AUM and all of our fees. So you keep...
Oh, cool. So you can see AUM.
This is how we know what everybody's fees are. Keep going.
Oh, so this is transparent to the whole industry.
100%. Everybody has to file this. Keep going. Keep going. Keep going. It's a lot of BS. All right there. Look at that. How much in assets do we manage? As of a few days ago, $10,097,715,159. How much of that is non-discretionary? Zero, because I know sucker. I ain't gonna hold your money for free. Keep going.
Is that what that means?
That's what that means. Yeah. Now go. What does that say? I can charge up to 2%. There it is. So it's
what is the highest somebody can charge?
Ameriprise Financial has their ADV at 3%. So that's the highest one that I know of in the whole United States.
Damn.
So what did that tell somebody? I'm allowed to charge you 0 to 2% on any of the money that I manage for you. I choose to charge 0.85%. That's what I charge the majority of my clients. I used to charge a lower fee. If you got that fee, you're welcome. I don't do that anymore.
Hey, what's up, guys? I'm so excited to announce if you are an investor looking to generate consistent passive income, then I've got something for you. I just launched the Imagos Income Fund. It is a private investment debt fund. So instead of relying on long-term appreciation or big exit events like most real estate syndications do, we decided to keep it simple. Focus on first position asset-backed lending just like a bank, meaning your investment is backed by real collateral and structured to produce income from day one. The target return, 10% paid out annually and also paid out monthly. So no guesswork, real passive returns, true mailbox money. And because we're in the debt position, not equity, we're able to prioritize downside protection, maintain shorter durations, and stay in control of the risk, which is most important in environments like this. This is built for investors who want steady cash flow, strong capital preservation, and real asset exposure without the headaches of owning, managing, and waiting years for a payoff. So if this resonates with you, if you want to learn more, I put together a full investor presentation breaking everything down. All you got to do is just text the word income to 844-447-1555. That's income to 844-447-1555. I'll send you everything so you can see if it's a fit for your portfolio.
That fee is extremely competitive because essentially, for most firms to get an 85 basis point fee, you have to have between $5 and $10 million. At $5 million, I charge 55 basis points, 0.55. So that's what you should know when because that's how much we're getting paid and taking out of your account to give you the returns and the alpha that we're trying to drive to your account.
Well, there you go. So now you can at least go to that website and look up whoever your financial advisor is and see if they've got any disclosures. Because, I mean, it's pretty shocking when we've pulled up some names, like not only like what it is, but how many times they've got.
I mean, there's this guy, I legally cannot put this on the screen, but because I would be slandering. But there's a guy in our area that a long time ago, went into pretty stark competition with. And I'm going to cut 9 disclosures. And I'm talking like, see all the red right there? These are all settlements. 190,000, 13,000.
That's crazy.
150,000. Those are the type of things you want to know about that when you're giving your money to somebody. Have you been found guilty of giving bad advice where you were liable for damages? If I would never give my money to somebody that had a disclosure. Never.
Yeah. Well, because you didn't. All right, so throw it up on the screen, Tone. If anybody wants to connect with Ryan,
Sorry
that's
for
what you
going
can
off
do.
on my tangent.
Free financial, yeah. God, I had to fucking rope you in.
Sorry.
Had to.
I love.
If they want to connect with Ryan and his team, free financial X-ray. They'll go through your whole portfolio. They'll look at your fees. You guys build up the plan of what you think is aligned best with their goals. Da da da. It's not my space, but that is something that we always offer out to anybody. And I know you guys put a ton of work into it because I loved mine. So you can text the word X-ray 844-447-1555. Be sure to check that out. All right, before we wrap up on stocks, I wanted to get your take on
15 minutes. My bad. I didn't realize. I'm keep blacking out today.
Meet Kevin gave his price targets on Tesla and SpaceX. I'm curious on whether you think we'll actually get to these entry points or not.
That you should not buy the SpaceX IPO, and we were right that the stock would bleed after a potential 30% move, which is exactly what happened. What are my predictions now? My predictions are, if you buy SpaceX under $80 per share, I'm happy with that. And if you buy Tesla under $225 a share, I'm also happy with that. That means we still have a good amount of downside to go, but those are numbers you should write down. Tesla, 225.
So you think we'll get there? I mean, obviously we got all-time high today. There could be some pullbacks along the way. 225 for Tesla. What do you say? Sub 80?
Tesla's at sub 80?
No. Tesla 225 is where he thinks a good entry is at, and sub 80 he thinks is a good entry on SpaceX. Will we get there?
I mean, we definitely could. If there was we would get there if we had broad market volatility as a whole. Because those are higher beta names, and we would see them run down. I don't know if based on SpaceX's earnings today, no. Based on Tesla's earnings this year and last year, no. If those metrics change, yeah, potentially anything can happen in the stock market. It's all, momentum based. So I would say that's probably a low likelihood, but definitely a good, could have potential. If we did see the price get down to those levels, which would probably be more likely for SpaceX than Tesla because of the, fact that SpaceX is so new, that might hold some validity, but I don't see him getting there anytime soon. Especially, again, if we get the announcement tomorrow of the trade deal, the benefactors of that are going to be rate-sensitive areas and inflation-sensitive areas, tech. So they're going to run real hard.
Okay. All right. I want to make sure. Do you got to get out of here on any particular time, or we got your boy for a little bit?
I'm good. I got
okay. All right. So we'll run a little bit longer here, just a few minutes over. But I wanted to cover this Leopold Aschenbrenner story, who was forced to sell Situational Awareness's entire public equity book to Citadel this last week. There's a ton of people that are making videos on it and reporting on all the news, and so I'm going to pull up one that's a kind of a simple, quick breakdown of what happened, what it was, why, and I think there's just a good little lesson in here in general. Let's give it a listen.
Story here. Leo Aschenbrenner's fund has been liquidated, and I think it was Citadel's doing a Wolf on Wall Street took this guy out. If you don't know who Leo Aschenbrenner is, he's in his early 20s, launches a multi-billion-dollar hedge fund. He's like this incredible quant genius. I mean, people have been talking to this guy for the last year, and rightfully so. I mean, he's made some incredible calls and then got completely liquidated. This is the timeline of sequence. Now, Citadel could have done this to him. This is what people are speculating, that Citadel, they predicted a few days ago that the Fed would jack rates up, which didn't happen. But with that signal, Citadel, if you don't know who Citadel is, they run a lot of the world. I mean, Citadel is behind some of the craziest trades. Ken Griffin, crazy stuff what they do. Market sells off. Situational Awareness, which is Leo Aschenbrenner's fund, gets margin called because rates were unchanged. I'm not sure why they have that much leverage on this, but anyways, Citadel acquired their entire portfolio the next day. All of these stocks go up 50 to 29%. Ken Griffin might have just totally rug pulled this guy in 3 days. That's wild. You could run a multi-billion-dollar hedge fund, and 3 days later, you're being liquidated and selling to Citadel.
So, I mean, there's more details to the story. I think, it was like the next day or 2 days, his entire portfolio, that they ended up buying that portfolio for, I think, 30 cents on the dollar.
Yeah, and it completely recovered.
And the next day, or within 48 hours, it had completely recovered. And then obviously where we're sitting today. And I think he was getting married like that week. He was like somewhere en route to wherever his wedding was going to be at. Now, you pointed this out though.
Cumulatively up over 1,000% since 2024 when the fund was launched, and they were up like 439% when they liquidated.
So again, all the investors in that fund did, wipe your tears,
Wipe your
did
tears,
just
don't go there.
fine.
Yeah.
But I think the lesson in that is dude would have continued to crush it, and any volatility that would have hit them in the short term, they would have been easily able to absorb it. But why couldn't they absorb it?
Too much leverage.
Way too much leverage.
Yeah, 4x. I don't even know why you would lever. Like, I mean, actually, I do. Like, you wouldn't get those returns.
He's
but
on
like
penny slots, baby.
Man, you would.
He got the gambler's itch.
I don't like leverage because of the downside effects of leverage. Like if you're 2x leverage, you only have a 50% spread you can go down. If you're 2x leverage, you cut that in half. Cut it in half again. I just don't like that. I don't really like leverage because it's not necessary for the stock market. It's really sexy when it works. I mean, look at imagine making 1,049% in 2 years.
Bro,
11xing your portfolio.
insane.
That's a nutty. If you had $1 million, you'd have over 13 million.
Have you followed him at all? Like, do you know why he's so fucking smart? And
I got 2 guys like him on my advisory team. I have a guy that has a Nobel Prize. We got him. And I have another guy that was a market maker who doesn't have the pedigree.
Market makers are crazy to me.
But
Like that.
I would say Darren is pretty. I tell you what, man, he was powered off bourbon, and he freaking can pick them. He's a really, really good analyst.
Is there any picks that you can share or no?
I mean, nobody bought Sando Corporation last year, and we made like 600% on that in 8 months. That was a nice run. No leverage, 0 leverage. Gold, we were requiring gold for many years when it wasn't sexy. That was his idea. Twilio, when it ran, and we sold that up like 400 or 500%. We had a couple of years where we had 121, 130% years and like back to back. And that was in the COVID eras, and that was due to the stock picks on his name. So really just high beta names right now. Really looking at that names that we were talking about earlier, looking at some other growth names, but diversification is the name of the game. We speculate just a little bit.
Yep. Cool. All right. Crypto Clarity Act still sitting. So, I mean, it's just ridiculous that we cannot find a way to get our elected representatives to move this thing forward. Obviously, there's a lot of layers to this, but as of right now, Tony, you want to pull this up on the screen? On-chain investors are piling into tokenized U.S. Treasuries. I think this is some early signs of where people are speculating we're going to see the market continue to run, especially if we get this Crypto Clarity Act passed. That being said, I think we go into the summer session where if it doesn't get passed, I believe in the next week or two, it's pretty unlikely. I don't know what it is on Polymarket right now, but they've got it at, I think, sub 20 or in the mid 20s for an end of the year passage. But total on-chain treasury funds have now hit a record market cap, 16.2 billion, up 77% year to date. And Kobayashi, if you don't follow them, they you don't necessarily always agree with everything they say, but they always have good content of topics that are related to investors and what's going on in the markets. The growth is being driven by a surge in demand to earn a yield on chain by U.S. Treasury bills as collateral. So very interesting. We've been talking about tokenization being a trend that is, I think, going to be here very quickly. You're going to continue to hear more tokenized stuff, and we're seeing more. I mean, you've got tokenization of collector's items and cars and houses and businesses. I mean, it's here. Smart money is already piling into it, and the raises that I'm seeing in the tokenization space or ancillary verticals of tokenization are definitely picking up some momentum. So we'll be paying some more attention to that. I don't have too much to cover on the real estate side today. So I think we're going to wrap up on that. Oh, I mean, one thing that was really exciting this week if we're not connected on social media yet, definitely. Well, one, I'm looking for a new video editor, so that's my plug. That I need you, amazing people that are out on the internet. If you've got any contacts or relationships in the video editing space, I am doing a new series on building the Imagos Income Fund, which obviously we've got already many of you that have been watching the show. In the income fund, we pay out 10%. We lend out money on collateralized assets. We deploy your capital. We put it to work. We act as the bank. But one of the things that we just announced today that we're really excited about is Imagos X. So there are companies like Quintessentially and Black Velvet. There's all kinds of these high tier membership companies that you have to pay 50, 75 grand a year, depending on the membership tier, just to get access to some of their bespoke inventory. You guys know me. I love hospitality. The hotels that I owned really ignited a passion for me that if I can generate returns, but I can also live the return, and I can collide those two opportunities together, there's something really magical about that. I think too many people defer and wait to start living their life now. I mean, that's one thing you and I have always enjoyed doing together, traveling and, investing in things
Langston Hughes, right? A Dream Deferred. Is that the poem? Very famous poem.
I don't fucking know.
Come on, baby. I'm educated.
You are. But that was something that I was going, there's a lot of boring investment funds that you can put your money into and they can pay your return, but it usually stops there. And I was going, man, how can we create an investment fund model that we can still compete and generate those same returns, but we can give our investors access and value beyond just the monthly mailbox check? And that's where we partnered with Imagos X, which is already a company that's been operating for the last 10 years that does, you think of it, they generally have access to it. Working with celebrities, hedge funds, high net worth individuals and clients that love spending money on experiences. And so if you're an investor in our fund without having to pay any kind of membership fee to any of those organizations, you'll now get that same complimentary access to our supply, relationships, events, experiences. So if that's of interest to you, text the word income to 844-447-1555. We'll send you some information on the fund. If there's any interest there, you can jump on a call with me specifically. I love connecting with each and every one of our investors, and I'm documenting this on social media now. I'm gonna become a content creator again. I'm gonna get the video going again. We're gonna be sending out, all the highs, the lows, all the fun stuff. And I want to document building this fund. I've got a couple $1 million in it right now, and my goal is to get it to 10 million as quickly as possible. And we are looking to partner with investors that value, one, generating returns passively, and experiences. And what I was thinking about the other day too was, last year, Ryan and I, because we love experiences, we love getting around great people, we hosted our Napa event.
Yeah, I had people hit me up if we were going to do it this year.
I had the gal at the hotel hit me up. You guys coming back?
I had a bunch of people like, we want to do that
So
again.
I'm just curious, and you guys tell us if you would be interested in this. You can either text us at 844-447-1555, the word Napa, or you can, put in the chat or whatever it may be. We have, and Ryan specifically, over the years, built up some insane relationships in Napa. I mean, you fucking buy stupid amounts of wine at the best places that Napa can offer.
Yeah.
And we've got access to experiences and things that you can't Google it and get in the house of the winemaker and go down in their cellar.
We sat at the kitchen table. I mean, we're sitting in this living room of the owner of the winery, and his like $9 million house full of like $4 or $5 million worth of art all over it, and we're just drinking wine out of his wine glasses in his kitchen. So it was awesome.
So those are the kind of things that
the newest one that I just picked up.
What you got? What you got for me?
CEO of Lennar. I got access to his house.
Okay.
So nicest house in Napa. I'm not kidding you. I've never seen anything like it.
I'm sure it is.
I just scheduled a
home builder in America.
Yeah, I just scheduled a tasting at his house. I had to call him and make sure he wasn't going to be there. I was like, dude is a billionaire.
That's
It's
amazing.
crazy. Yeah.
So those are the kind of, again, these are the kind of experiences that, I mean, I love making money, but I love spending it on shit that is
Adult Disneyland.
Yeah, is a life worth living. And that's, I think, why we do this show, is because obviously, we want to keep our sword sharp, and we want to keep making money, and we want to keep, slaying the Goliath of whatever our wealth building goals are. But what is a bunch of commas and zeros sitting in your fucking bank account if you can't go out and enjoy them and experience them with people that you love? And that's what we love doing. So I was going to throw it out there. If we get enough interest, and I'm thinking like an intimate group, I'm thinking like 10 max.
It has to be. It actually would have to be 8 max.
Okay, so 8 max, because we got our
My driver only got 11 seats, baby.
Yeah, them
Are we bringing executive assistant woman?
No, not this. Oh, we could bring her back if we.
It was great.
If we need to.
That was insane, dude. I've never had an EA I was like, holy. She's like a IEA.
Yeah, she was making sure we were dialed in. So if that would be of interest to you guys, obviously you and I will be too. So we'd have spots for 6 people. And we'd probably make it all inclusive. We'll figure out the costs and all that kind of shit again. But
yeah,
this would be obviously networking and hanging out with epic winemakers, drinking epic wine. Obviously, Napa is one of the food and culinary meccas of the United States. So we've got amazing. I mean, we've always brought in chefs and world-class hospitality on that front.
Chefs. I got a house on Pope Street.
So and that might be a cool opportunity. So let us know what your thoughts are. That being said, as always, we appreciate you guys tuning in each and every week. You're gonna be gone next week?
I'll be gone. No, I'm back. I'm gonna go see the boys on. I'm leaving on Thursday.
Okay. All right. So then we'll see you guys next Tuesday live, PST 2 p.m., 5 p.m. EST. As always, thanks for tuning in. We'll see you guys.
Cheers, y'all.